Hey traders, Stephen here with thetradersplan.com. It is Friday, March 11th. I'm about to shoot recording the top ETFs video of the week. We're going to look at the overall market, and then we're going to look at some of the top performing ETFs of the week, see which ones are performing nicely, see which ones are setting up. If you don't mind, please subscribe to this channel and like this button. That way, when we send out videos, you can be notified immediately and more people can find our channel. That would be great. So let's get right into the NASDAQ, and then we'll look at the S&P 500. So the NASDAQ just kind of really got rejected at the 20-day moving average, that pink line right there. Okay, so now you kind of got this little test. And, you know, yesterday it popped really good on Wednesday. Yesterday it fell, but it did come off the lows. You can kind of see right here, it came off the lows a little bit, and then pre-market is up a little bit. So we'll kind of wait and see until we can really get above the 20-day moving average. I'm not going to hold my breath, but I do think we could potentially get a rally up into the 14,000 area. It seems to be a reasonable place. I kind of think that's my target whenever we do get a rally, because that's kind of where that 50-day moving average is going to come down. It'll probably get rejected the first time it hits it, and then it could potentially come back, and then who knows what happens. It could come back down and retest, or it could kind of shoot through here. But the first line of resistance is the 20, and then if we get through that, I think we could get to 14,000, which is about a 7% move from here. But and until we really clear that and get out of here, after that, no one really knows. S&P 500 is about to join the NASDAQ with the death cross right here. You got the 50 going under the 200-day. So, you know, the market just looks ugly. And I know there's a lot of negative and bearish news out there. It's hard to find the bullish case right now, but there are trades that are setting up. Right, we have actually done a pretty good job of making money over the last 6 weeks. Oil has gone up, clean energy has gone up, uranium has gone up. So you have a lot of these individual industries that are bucking the trend. So that's why you kind of follow along with these videos and you can find some opportunities. But you know, right now it's just kind of looking more bearish. But again, you never know when we could just get out of here. So I always say, don't be too bullish, don't be too bearish. Just kind of be willing to change your mind at the drop of a hat and bend with the wind. So let's look at the top ETFs of the week right here. You can see uranium and hydrogen as at the top. You can see clean energy, oil, solar, right? A lot of the usual suspects over the last 6 weeks. Not a lot of individual U.S., technology industries, none of that stuff. It's mostly just been stuff surrounded by energy industries, whether it's clean energy or, you got your hydrogen or oil. But let's just kind of start at the top and go through here. So the uranium, I think, is a little extended. This is a really, really fast moving ETF. And sometimes when you get into a bear market type of action, I just like to trade the aggressive ETFs because it really can eliminate single stock risk, right? And I'm really trying to eliminate risk when the market is unfavorable. But I mean, these ETFs right here, like this one was up 6%, 5%, 6%. I mean, this can move 6, 7, 8% in a day. So it can move like a stock, but you can eliminate the single stock risk. Now, once we're in a more favorable environment, then I'm all stocks. But it's just an idea. So, you have the breakout. This is looking pretty good. It's a little extended to get in right here. So if you didn't get in, I think I shot a video earlier this week where like, hey, if it crosses above this level right here, this kind of breakout zone, you can see it broke out, pulled back, and then it rebroke. That was a good entry. So I'm kind of looking at around the $80 level would be a better place to pull back to enter if you haven't already got in. I'm not going to chase this, because even though when you're looking at it in real time, it looks like it's going to do this. And I'm not going to say it can't. It might. But the reality is you can kind of see the downtrend. You got all these zigs and zags, right? That's probably what it's going to do on the upside as well, right? It's going to balance it out right there. So I like it better at 80 at this point in time. The hydrogen ETF, also another ETF that can really move like a stock. It was up 11% in a single day. That's pretty serious right there. You know, it popped, pulled back, and then kind of rebroke that level right there. So, me personally, I really think that I might let it pull back also a little bit further. You know, kind of maybe down in the 17 area a little bit, kind of under 18. That way I can get closer, because I think if it falls below the 50-day moving average, you just get out. Right now, it's about 9% above that level, so technically you could risk 9% right here, and that would be okay, but I'll probably watch it today. So that would be your kind of max stop loss right there. But again, this is something that's going to go up, pull back, go up, pull back. I doubt it. It just goes straight up. But I've seen weirder things lately. Uranium, we already looked at that. Clean energy, this PBW, this is actually a good looking ETF right here. And I would slap a buy rating on this right now, because you have this kind of bottoming pattern right here. You can say a little mini inverse head and shoulders. You got the neckline, you got the breakout. It pulled back. If this is up at all today, this would be a good entry. And why I say this could be a good entry, because you could just put a tight stop under Thursday's low. And if it rolls over, just forget about it. Just let your stop loss get hit. You're risking, I don't know, maybe 4% for what I think, you know, the target could be way up here, you know, $78 if it really gets going. So, I mean, just, you know, clean energy, a lot of these aggressive stuff, clean energy, cannabis, crypto, really all peaked in January of 2021. And the charts are really, really looking ugly. Really, really looking ugly, and have been for about 13 months now, maybe a little bit more. But we're just kind of looking for a reason that these could really get going. And you can see even when they rally, you know, from 71 to 96, even these ETFs can get going. Now, I could make the argument that the move that it made in 2020, the valuations, it should never have been this high. I can make that argument. But, right, forget about that. It happens. So now I have a little breakout, and you could enter with just a tight stop under yesterday's low. All right, that setup looks pretty good to me. It's up 11% this week. So a lot of the oil, you know, it's kind of changing its personality a little bit. And if you look at a chart of oil futures, it looks pretty ugly. You got 3 red bars, right? And we don't know if they're just going to pull back hard and then go straight back up. But it's just getting a little bit more volatile. I still own oil stocks and ETFs. And honestly, I'm not trying to get cute, trade in and out of them. I've just bought it right and plan on sitting tight and just sitting until the trend is over. And that's kind of where the money is going to be made. And I'm up a lot, and that's nice. But I'm not trying to get too cute, get in and out. Just kind of keeping an eye on, because you really do have, I mean, you could argue that this is a melt-up move, right? It's already in an uptrend, and then it accelerates to the upside. It kind of melts up, right? And it can melt up for a while, but right now I still think a lot of energy stuff is extended, so I wouldn't go out and chase it. It's starting to get really volatile, especially if you look at the oil futures. So I'm just going to hold on to the energy stocks and ETFs I have and give them a little bit of breathing room. Carbon, I'm not touching this. I mean, 56 to 35. I don't know what it's doing, but I'm not touching that. So solar ETF, I think this was probably a leader over the PBW we just looked at, because it's spent a lot more days above the 50-day moving average. Right? So when you have clean energy that's moving, right, we'll just kind of go, when you're trying to figure out which one's stronger, well, this one's only been above the 50-day moving average for 3 days. This one's been above the 50-day moving average for 2 weeks. Okay? So let's look. I do own some of this, full disclosure. I have owned it. I actually bought it on this reversal day, and I've just kind of been sitting on it ever since. Looks pretty good. If you haven't got in yet, I would let it pull back, probably more in the 72 range with a stop under the 50-day moving average. ACES, ACES. I'm actually not too familiar with this one, but This one's also looking pretty good, 8% above the 50-day moving average. So, I mean, that's really what I'm looking at right now. Like a lot of this stuff that has, and the 50-day moving average isn't a perfect, right, solution. It's just really a line in the sand, right? It's kind of a trailing stop. So, if it rolls below this line, I don't want to be involved because it could come all the way back down. But, right now, the ETF is 8% above the line. You could enter right here with a 10% stop loss, right? So at the moment, I'm not crazy about buying too much on Friday because you don't know what's going to happen over the weekends, especially in a bear market. Something could explode. But so right now, if I'm looking at some opportunity, I think PBW is a good opportunity. I think uranium needs to pull back. I think that I would definitely, if you don't already own, definitely keep an eye on TAN, let it pull back a little bit. Outside of that, there is one thing I really do want to talk about, and that is the Bitcoin trust. So a couple days ago was interesting because Biden came out and he said, I'm going to create a framework for cryptos, right? So we can, regulate it, figure out how it can incorporate into our financial system. Not that he's going to start accepting Bitcoin, but I mean, I think he recognizes that it's not going away. So the market popped on the news, and I think if the U.S. starts to regulate cryptos, I think that could create a major move to the upside in cryptos because you have all these institutions that are sitting on billions, hundreds of billions, trillions of dollars, whatever. They're sitting on all this money. They could really start piling in once they have a little bit of clear pathway for how they can invest their clients' monies in cryptos. I think that would be huge for the space. It might sell off at first, but I think it would come back. But right now, I mean, if you look at Bitcoin, I could easily make the case for it's just a massive double top. It looks ugly, right? But right there, nice double topping pattern. So if it breaks down, I would be careful. But if it goes this way and breaks above the high of Wednesday, which was kind of the news day that Biden said, he's going to create a framework, or the Fed is going to create a framework for cryptos. I think this could rally, and this could rally pretty nicely. Now, this is a risk-on asset, so I would think, in theory, you would need the overall market to at least not be selling off, right? I think if the market sells off, I think this is going to be hard to buck the trend. But right now, at the moment, based on that news and the pop yesterday, a couple days ago, I'm looking at the glass half full, but it is about to get squeezed. It can go absolutely either way, right? It's going this way or it's going this way. And if it goes this way, if it breaks above Wednesday's high, you might want to consider owning some if you don't already, okay? If it breaks down, I would be cautious. I would be incredibly cautious because that's one heck of a neckline right there. And, we don't know how far it can fall. So I hope this was helpful. Let me know if you have any questions.